Hey, good morning. Saturday, April 18th. I just wanted to make a little uh, video here. I'm still working on developing this time cycle indicator. Uh, and I just wanted to talk about a few of the interesting things that are being added. I've gone through some of this stuff on the other videos, but the screens were maybe not quite as uh, were maybe not quite as visible or laid out in a way that was totally coherent. So I'm just working on trying to refine some of the logic so I can send it over for the coding aspects. And I really want to make sure that this all aligns well. So I figured while I'm at it, um, I may as well record a little video. So once again, I want to give excuse me, all credit for these ideas really go to well, the original ICT uh, structure, market structure, and then time cycles. I feel like there was quarterly theory, which came out some time ago, and then Zusi really picked it up and ran with it. So a lot of these ideas are coming from him. I'm not sure where these SMTs originated from, but putting it all together is rather powerful. And basically, there's already indicators that show a lot of this stuff. This is currently the cycles here that are being shown. This is Zusi's indicator. But basically, what I wanted to do is, what I am doing is creating an indicator that has all of the box separations along with the um, different sessions. So Asia, London, and New York. And then there's all the small details that I wanted to include so that I had one complete indicator. And some of the smaller details were adding the macro windows. So this is not the indicator. All of this stuff I've currently drawn onto the chart. The indicator will have all of this automatically displayed. Um, and this is sort of through my own, like, I guess, taking a lot of these ICT ideas and Zusi's ideas about time cycles, and then adding a few small things that I've come to appreciate through my experience in the markets. Um, and I'm just looking to kind of share this and get some opinions, and hopefully the indicator works out uh, well. Um, I think it will. It's basically going to focus on this one strategy presenting itself, so everything becomes extremely mechanical. But I'll just talk through it briefly. I've done so in the previous video, so if you've watched that, this isn't going to be anything that new other than displaying exactly how it's going to work. So it's going to outline the 90-minute cycles, the 30-minute cycles. I don't really have much interest on going down below anything lower than 30-minute cycles, although, and the SMTs will not display anything lower than 30-minute cycle SMTs, but it's still useful to have your eye well trained to spot um, lower time frame SMTs because they could be an added confluence. I often notice that you'll see like a 90-minute SMT followed by um, a smaller intracycle SMT. So you might have like a 90-minute SMT here and then maybe like a 1 minute or a 3 minute SMT on the lows, which can kind of add to the confluences, but those will not be indicated because eventually the chart just gets too muddy. There's too much going on, and I find like that gets more confusing. You want things to be really clear and concise for these for these. And of course, I'm adding the option to toggle a lot of this stuff on and off, so it's all customizable. So if it does feel like it's getting too cluttered, then you can start turning things off. But um, the things I really like that I've been using are anchoring midnight open and the 8:30 news opening price. And this is pretty well known in the ICT world that 8:30 kind of acts as not only a magnet on price for the New York morning session, but also support and resistance. And the way I like to use the 8:30 news opening price is um, as a bias for fake outs. So generally speaking, if price is trading below 8:30, looking for longs, and it's if it's trading above 8:30, looking for shorts. The midnight price, I suppose, is more so considered as a daily a daily uh, algorithmic price level for your potential bias for the day. But it's nice to have on as well because price will often find support like here and here on midnight. We got ES at the top here and then NQ. And it's really what I love about monitoring multiple assets and then starting to add all of these like time level algorithmic price levels as you start to notice these interesting um, deviations like ES had the New York Open just below midnight and Q had it just above. And if you keep collecting data on this, you'll start seeing these interesting anomalies that present between assets. Of course, SMTs being a really important one, but you'll see here as well that price action, this is April 9th, this setup here, so it was earlier this month. And price action for April was extremely bullish. So here, uh, on right around the second macro, which I deem around 1040. So right at 937, we had our SMT in right before the opening window of the macro. And the macros are basically where you can expect um, a higher probability of price movement. So it's nice to use every confluence possible to limit your, or at least for myself, I find it useful because it limits how much or how often I trade. So I don't overtrade. If one of my rules is I can only enter on the macro window, then I'm not necessarily looking to enter like at 9:30 or before 9:30 or in the afternoon. I'm just focusing on these two basically 30-minute windows. So the way the indicator is going to work is it's going to focus on the time cycles and the larger SMTs. So session SMTs, 90-minute cycle SMTs, and 30-minute SMTs. And then within that, I think it just comes with experience as you see these setups happen over and over and over again. You'll start to see the, let's call them the intracycle SMTs showing up. Um, but those aren't going to be marked as I mentioned before. So anyways, just briefly, there was a couple things here that I thought were relevant to note, and I think training my eye to see these things, particularly when I draw it all out on the chart, is helping me to is helping me prevent myself from entering trades in the wrong direction. And SMTs can be a great confirmation of, like, say for instance, you enter a trade short and that trade starts moving in your direction, but you notice one of the other assets starting to form an SMT on the lows, on a new swing low. So your trade is just starting to break out lower. And say on this low here, you start noticing an SMT forming with NQ. That can be a sign that you want to either adjust your stop losses or start thinking about protecting your position, because that trade could now want to move against you. Uh, So I feel like that stuff has been really helpful for me. I've learned a lot of that from Zusi, so a lot of the credit goes to him. If you want to learn more about this stuff, he's really the guy to check out, because his perspective on this stuff is uh, really well thought out, uh, and he explains it really well. But anyways, I'll just outline kind of the steps here for the indicator that I'm building. The first thing it's going to do is it's going to focus on the macro windows. So these are going to be high probability windows for price action for these setups to occur in. Secondarily, it's going to monitor the three primary assets, so ES, NQ, and YM. It's going to show these uh, SMTs, hopefully just like this. Once these SMTs are in place, it's going to monitor price. And what it's basically looking for at this point is for price to close above the imbalance that created the SMT. So you can see in this price leg, price created this imbalance, moved back up, and then SMT'd here. And something I've started to notice is that these setups sometimes don't appear as clear on one asset. But if you're monitoring both assets, it may be a lot clearer on the other. So I would say on ES here, if you were only watching ES, you might think to yourself, well, price is trading along, price is extremely volatile. It's 1030, which is commonly in the ICT world is a well-known reversal area, I believe, between 1020 and 1040. But point being, you might see price come down and not take this low, and you might think to yourself, like, I'm not going long here. We basically have relative equal lows here. But if you're also monitoring NQ, you'll see that NQ swiped the previous, this AMA 90-minute cycle. So it swept it, and then the high probability imbalances actually occur when previous cycle high and lows are displaced above or below. So for NQ, you get a pretty clear setup, because if you take the low of this AMA cycle, you'll see that this was the displacement right here that ended up sweeping. So for a setup like this, I would actually consider this to be the higher probability inversion gap. And that's how this indicator is being coded. It's being coded to detect the SMT and then create the buy signal once the inversion fair value gap is closed. For this example, obviously above, and then limit orders would go in the box. You can see here as well, as soon as price closed above, which would be this 1052 or 1051 candle. This is all happening on a 1 minute chart. You can see price kind of trade out there and then tap it a few more times here before moving away. But yeah, that's what I've been noticing as I'm spending more time trying to refine the logic and just collecting more data on how these markets move. Um, Oftentimes I'll see that the setups will appear on both assets or maybe all three assets. One or two of the assets might create new lows, and on those assets, the setup will be a lot clearer, because you'll basically have this displacements through the previous cycle. So I think that's pretty interesting. And I just made a little comment here. Notice on the highs in the first macro window, we didn't get SMTs. So there was really no reason to be going short here in terms of these smart money time reversals. And I don't have a YM chart here, but I have been noticing as well that ES and NQ do appear to offer the primary benefits of SMTs. And then at this point, I kind of like to use YM as a kind of like if the high probability confluence is SMT between MES and or ES and NQ, then YM almost acts as the like another potential confirmation. It's another nice thing to look at, but it doesn't seem to act as high of a probability as ES and NQ. So, anyways, these are kind of the things that will be on the indicator thus far: the macro windows, the time cycles. Um, Another thing I'm going to hopefully, well, another thing that is going to be on there is a toggle for the previous day high and low, previous week, previous month high and low, so you can turn them on and off. These uh, prices are going to be anchored, these sort of algorithmic time anchors or time levels, whatever you want to call them. And then I'd like to add um, 1 hour, the most recent 1 hour fair value gaps so that those are displayed, because there's also um, the 1 hour fair value gaps almost always have a certain amount of support and resistance in them. So I think that would be helpful. And then other little things will be added, like higher time frame bias analysis and and alerts. I think alerts will be really handy because um, ideally you don't have to sit and stare at the chart. You know, once this 90-minute or SMT shows up inside or right around the macro window, an alert will hopefully ping, and then you can come sit down and see if you get the price closing in this example above the inversion fair value gap. Um, so that's the idea, and maybe at some point, if I continue to work on the logic, I can try and automate this somehow. But I think right now it's quite useful to have that blend of sort of automated AI, the automated mechanical AI component blended with like human intuition. And of course that human intuition has to be trained by studying basically thousands of hours, of chart work at this point. But I think that this helps paint the picture of a very specific model and a very useful and well thought out model. So anyways, thanks for checking it out.